The method of capturing your corporation's economic transaction into organized account on a regular basis is known as bookkeeping. Bookkeeping is a crucial component of your accounting process for several factors. When you maintain exchange records up to date, you can produce reliable financial statements that help you monitor company performance. This course will walk you through the various techniques of bookkeeping, how entries are recorded, and the significant financial statements involved. This course will also cover the fundamentals of business operations such as management, finance, and sales activities. After completion of this course, learners are expected to have the essential numerical skill required for bookkeeping and accounting. So put on your thinking hats and let's get started with this session on bookkeeping. If you haven't subscribed to our channel yet, I want to request you to hit the subscribe button and turn on the notification bell so that you don't miss out on any new update or video releases from Great Learning. If you enjoy this video, show us some love and like this video. Knowledge increases by sharing, so make sure you share this video with your friends and colleagues. Make sure to comment on the video for any query or suggestions and I will respond to your comments.
Hi, welcome to this video on bookkeeping. So, we have known the word bookkeeping, correct? So, in the accounts, we are regularly using this word bookkeeping. So, today we will discuss about what do you mean by this bookkeeping and other things involved in the bookkeeping. So, first we'll see the agenda. First one, introduction to bookkeeping. Second one, meaning and definition of bookkeeping. Third one, objectives of bookkeeping, elements of bookkeeping and accountancy, methods of bookkeeping, difference between bookkeeping and accounting, single entry system of bookkeeping, double entry system of bookkeeping. So these are the few points we are going to discuss in this session. So first we'll start with the introduction to bookkeeping. So the bookkeeping is also known as primary books of accounts. In general terms, bookkeeping is nothing but whatever the activities or whatever the transaction, okay, that we are going to record. If you take example of any company or any organization. So if you want to go and you need to visit one person in that XYZ department. So the security is not going to allow directly, correct? So you need to go first and there we have one ledger book. Okay. In that ledger book, what is your name or what is the mobile number, at what time you are going inside, and what is the purpose of visiting and for whom you are going to meet. Okay. All this information you need to write in the ledger book, correct? Like that only in the business or in the organization, they are going to take or they are going to record all the transaction. It may be monetary or non-monetary activities. They are going to record in one ledger book. That we call it as bookkeeping. And it is very, very, very important in the organization. So this is the base for all the accounting. Okay. If we have the transaction, then only we can go with the further books of accounts. So it plays a very important role in the organization. The aim or main intention of all the business is to make profit. Okay. All the business or all the organization or all the activities, okay, whosoever is going to do for the purpose of money or for making the profit only, they are going to do all the activities, correct? So that is the first or prime objective of all the activities. Profits is nothing but excess of income over the expenditure. So how to calculate the profit? Whatever our expenses and whatever our incomes are there. So incomes minus expenses, if it is positive, then it is a profit. If it is a negative, then it is a loss, correct? So if you want to get to know how much income we have earned and how much expenses we have paid, means for that purpose, yes, we require this bookkeeping. If you miss any one entry of income, or if we miss any entry of expenses, then we will not get the accurate profit or loss information, correct? So if you want to get the accurate profit or accurate loss information means, yes, we require this bookkeeping. Okay, recording the transaction or activities in the organization. Yes, here in this bookkeeping, they need to record all the transaction. It may be related to the money or monetary value, okay, that they are going to record. For example, what are the transaction? Okay, they can record in the bookkeeping means the first one, billing of goods sold or service provided to customer. If, for example, the company sold 5 units of goods to XYZ customer on the basis of cash. Okay, so if a record that 5 goods they have sold and what is the cash comes to the business that they are going to get. If they're not recorded or if they're not keeping in the ledger book means, yes, they are going to miss the transaction. Correct. So second transaction, paying suppliers. Whatever the goods we have purchased from the creditors, for that we are paying now. That is paying to suppliers. Recording depreciation on assets. So recording depreciation, that is not the monetary, it's coming to the business or going out of the business. Nothing will happen. Only the fund flow will be there in the organization. Within the organization, only all the transaction will be there. So that is also we need to record. So recording the depreciation on assets. So next, all the other transactions in a organization, not only cash flow or fund flow, all the activities, whatever the day-to-day operating activities done in the organization, they need to record in the bookkeeping. Okay, so this is the brief introduction about the bookkeeping. Next, meaning and definition of bookkeeping. So we have seen what is the brief introduction about the bookkeeping. Now we'll see the what is the meaning and definition of bookkeeping. So the bookkeeping is the art of recording business transaction in the books of accounts in an ordinarily manner. So for this, no need to maintain any specific, okay, or format or any other books of accounts. Just we need to record in a systematic way. Okay, whatever the transaction is taking place, according to that, we need to record the all the transaction in the ledger book. Definition is the science and art of correctly recording in the books of accounts all those business transactions that results in the transfer of money or money's worth. So it is the science and art. Okay. So maintaining a book or maintaining the all the transactions in the books of accounts, that is the art and science. Okay. In a systematic way, we need to record all the money and money's worth transaction so that we will get the accurate result at the end. If you are not recording properly, then we are not going to get the accurate results also. So bookkeeping involves the following process. So what is the process of this bookkeeping? Okay, we have 4 steps or 4 process involved in the bookkeeping. So first one, identifying accounting transaction. Okay, so only which are all related to the accounting. So only money and monetary worth transaction we need to record, correct? If for example, someone is visited the organization or someone is came for the interview or someone came for the getting the estimation, okay, estimation of products. If we given the bulk order, what price he can get the products. Okay, for that purpose they are going to come. Although transaction will not be recorded for the accounting, that is not necessary, that is not required also, correct? So only money and monetary worth transaction we need to record, that is helpful or that is useful for the books of accounts. Second step, initial record of accounting transaction. Okay, all your books of accounts, okay, either it may be a journal entry, trial balance, ledger account, P&L account, balance sheet, all your financial statement. First step, we need to start with the bookkeeping. Okay, first if you have the transaction, where you will get the transaction from the bookkeeping. or from ledger books only you will get the transaction, correct? So from that transaction only you are going to start with a journal entry. After that, from journal to we are going to post it to ledger account, from ledger to trial balance to P&L account, P&L account to balance sheet we are going to prepare, correct? So for all the books of accounts, the first step or initial step is to recording the transaction or the bookkeeping. That is the first step. Third step, preparation of ledger account. Once the pass the journal entry, okay, from the initial book to journal entry, if you pass the transaction means second step is to we need to post it to the ledger account. So ledger account is nothing but the individual account for the individual items, that is for assets, liabilities, expenses, okay, or persons, okay, that we are going to maintain separate ledger account. That is your date, particular amount. So this is the format for ledger account, correct? So with that format, we are going to post it to all the journal entry into ledger accounts. So there we will get the closing balances of all the individual account. So from that closing balances of individual account, with that closing balances, we are going to prepare the trial balance. Okay, your trial balance format is serial number or date, particulars, debit, credit. So in your debit side, all your assets, expenses, and losses that we are going to record. And at the credit side, we are going to record all your income, gains, and liabilities. This we are going to record it at credit side. Okay, once we get the closing balances, then we need to prepare the trial balance. So these are the 4 steps involved in the bookkeeping. Next, objectives of bookkeeping. So these are the 3 major objectives of bookkeeping. We have so n number of objectives are there, but in that only these are the 3 main or major objectives are there for bookkeeping. So first one, it provides a permanent and systematic record of all the business transactions. Okay, so whatever the journal entry we are going to prepare, or whatever the ledger account we are going to prepare, that is we are going to prepare monthly wise or quarterly wise or yearly wise. But this transaction, that is bookkeeping, we are going to record from the day one of the company to the till the date of closure or closing down the company. Till that time we are going to record all the transaction. Okay, while comes to methods of bookkeeping, I will tell you we have 2 different types of or methods of bookkeeping. One is traditional method, one is computerized method. Okay, in any one form, they are going to record all the transaction in the organization. This will be the permanent for the organization from the day one to day closes of the organization. Okay, all the transaction will be recorded in the bookkeeping. So second objective, the periodical results as to profit or loss should be readily and accurately ascertainable. Okay. If for example, sometimes we have done the error or if I have done the mistakes in the journal entry, so all your books of accounts will be wrong. Correct? But when we need to calculate again means, yes, again we need to start from the bookkeeping. That is from our primary books of accounts. All the transaction will be available. So we need to start with the scratch or we need to start with the 0 to financial statements. Correct? So for that purpose, this bookkeeping will be useful. And the last objective, to enable financial data to be supplied for management of business. So this management or the organizational owners, okay, they will take this financial data or for this bookkeeping, all the transaction will be recorded, correct? So they are going to take and how much day-to-day transaction they are going to happens in the organization. For that purpose, this management or the owners, they are going to use this bookkeeping. So these are the major objectives of the bookkeeping. Next, elements of bookkeeping and accountancy. So what are the main elements are involved in this bookkeeping? So which are all the books they need to maintain either in a traditional method or in the modern method, or else in the manual entry or computerized entry they need to maintain, correct? So we'll see which are the elements are there in the bookkeeping and accountancy. First element is books. Yes, the word only indicates books. Here in these books, we have 8 different kinds of book they need to maintain. Okay, so we'll see one by one. So here we have the list of books they are going to maintain in the bookkeeping. That is first one, cash books, purchase books, sales books, purchase return books, sales return books, bills receivable books, bills payable books, and journal proper. So these are the 8 books the company needs to maintain in the bookkeeping. So we'll see one by one. So cash book. So in the cash book, what they are going to maintain? So in the cash book, whatever the cash inflow and cash outflow is there. Okay, whether it may be a cash received by the company or cash paid by the company. Okay, all those transactions will be recorded in the cash book. So second one, purchase book. In the purchase book and the sales book, specifically they are going to maintain only the purchase entry and sales entries in the books. So next, purchase return books. So in the purchase return, the company is going to purchase the goods from the suppliers, correct? Or from XYZ person, they are going to purchase the goods. So after brings that goods to the organization, some goods were damaged or some were not up to the mark. Okay, either it may be in the quality or color, whatever it may be. So for that reason, we are going to return the goods to our supplier. So that we are going to record in the purchase return books. Next, sales return books. Okay, how we are going to return to the supplier, like that whoever purchases from us, they are going to return due to whatever the reasons. Okay, so on that time we are going to record all the sales return transaction in the sales return books. Next, bills receivable books. So the company is going to allow some credit payment or credit repayment period, correct? For example, 30 days the company is going to allow for their customer to repay the money. So within the 30 days, okay, we need to maintain all the records, correct? So that we are going to maintain in the bills receivable books. Next, bills payable books. So what are the bills or whatever the vouchers the company needs to pay to the others? That is the liability, correct? So that they are going to maintain in the bills payable books. And the last one, journal proper. So this book is going to maintain if any transactions, okay, having the error, or if you pass any journal entry mistakenly, or if you have done any error in the journal entry. So on that time, if you want to correct the journal entry, then we are going to pass some entries in the journal proper. So these are the first elements of bookkeeping. Under the books, we have 8 different kinds of books the company need to maintain in the bookkeeping. That is the first element. So we'll see what is the second one. So second element is ledger. Accounting ledger is an account or a record used to store bookkeeping entries for the balance sheet and income statement transaction. Balance sheet in the sense all your assets and liabilities information, and income statement transaction. So income statement transaction is nothing but whatever the cash inflow and outflow, that is your income and expenditure. Okay, that they are going to maintain in the ledger account. So accounting ledger journal entries can include accounts like cash account, receivables, investments, inventory, accounts payable, accrued expenses, and customer deposits. So these are the individual account they are going to maintain in the organization. So ledger is nothing but whatever the we have passed the journal entry. For all the journal entry, individual ledgers account will be open, and for that we are going to calculate the what is the opening balance and what is the closing balance, that we are going to find in the ledger account. So individually, like for cash, they are going to maintain this ledger account. This is the format for ledger account: date, particulars, amount, date, particulars, amount. So this is debit side and this is the credit side. On the top of this, we are going to write cash account. If for example, we are maintaining investments or investments account or inventory account or accounts payable, accounts receivable, like that individual account we are going to maintain in the ledger account. So whatever, if for example cash, okay, so all your inflows, cash inflows to the organization, we are going to maintain at the debit side, and all your cash outflows, we are going to record it at the credit side. For example, inflows, sales. If you made the sales, what you are going to receive? We are going to receive cash, correct? So any interest received, commission received, okay, that we are going to record it debit side. And when it comes to credit side, for example, plant and machinery purchased, so on that time we need to pay cash. Goods purchased, okay, rent paid, electricity paid, okay, all those things will be comes in the credit side. So that is the ledger account. Next elements, that is third one, trial balance. Trial balance is nothing but all the ledger account, okay, whatever we have prepared individuals account, there we are going to get the closing balances. So once we get the closing balances, we need to prepare the trial balance, okay, whatever the closing balances are there, that we are going to take into the trial balance, and then we are going to prepare the trial balance. After the trial balance only, we are going to move to the all our financial statements, that is your income statement, P&L account, and balance sheet. Okay, so this is the format for trial balance. Okay, so date, particulars, debit, credit, only 4 columns will be there here. Either we can maintain date or we can maintain serial number. According to ledger account, we are going to maintain the serial account here. So in the particulars, whatever the individual account, for example, cash, inventory, receivables, investments, that all those things we are going to record in the particulars. And when it comes to debit side, in the debit side, all your assets, expenses, and losses we are going to record in the debit side. If for example, debit side, all the assets, cash, furniture, plant and machinery, building, and expenses like rent, electricity, water charges, depreciation, we are going to record it at debit side. And when it comes to credit side, all your liabilities, income, and gains. For example, liability, capital, bank loan, okay, sales, all those will be recorded at the credit side.
Next, advantages of double entry system of bookkeeping. So first one, complete record of transaction. So in the double entry system of bookkeeping, if we compare with the single entry system of bookkeeping, we will get the complete record or complete transactions of all the activities. Okay, that we can found in the double entry system of bookkeeping. But in the single entry system, yes, we are not going to get the complete transaction or complete record of transaction we will not get. Okay, so that is the first advantage of double entry system of bookkeeping. Second one, accurate result. So why we will get the accurate result in the double entry system of bookkeeping means we are going to record all the transaction or all the activities it is related to money or monetary worth. Okay, or cash and cash equivalent. Okay, so for that we are going to record all the transaction, so we will get the accurate results also. So next, determination of statements. So once we done the statement, whether it may be income statement, profit and loss account, or financial statement, okay, we can cross verify with this double entry system of bookkeeping. So which transaction we have started and what are the transaction we have recorded and which is the amount we have taken to the financial statement, that we can do the cross check. Okay, on that time we can easily determine the or determination of the financial statements also, if any errors or frauds or mistakes are there. Okay, that is also one advantages of this double entry system of bookkeeping. Next, ascertain accurate profit and loss. Because in this double entry system of bookkeeping, everything will be there. Okay, from A to Z, all the activities from the day once the office is start till the close. Okay, they are going to record all the transaction or all the activities in the organization, so they cannot miss any transaction. Everything will be recorded, and with that help they can do the whatever the books of accounts, that is your journal entry, ledger account, trial balance, P&L account, financial statements, they can prepare and they can get the accurate profit or loss information. So next, prevention of fraud. In the single entry system, the finding the fraud or errors or mistaken is very hard to find. Why? Because they are going to miss some transaction. But when it comes to the double entry system of bookkeeping, they are going to record all the transaction. They are not going to miss even one transaction, correct? So we can easily prevent the fraud also or errors also in the double entry system of bookkeeping. Next, better control and sound decision making. In the double entry system of bookkeeping, they can control over all the activities. Why? Because they can check whatever the activities are happening in the organization for the past 1 month or quarterly basis or half yearly basis. They can check and they have the control over the transaction that will be there. And sound decision making. If anything is missing or it is out of control, then they can take the good decision making with that activities also. And the last advantages is comparison of results for the current year profit with the past year profit or the last year profit they can compare. Okay. With that, they can estimate for the future also. Okay. That only possible through this double entry system of bookkeeping. Next, disadvantages of double entry system of bookkeeping. So first one, requires thorough accounting knowledge. Okay. For maintaining in a single entry system of bookkeeping, we don't require thorough accounting knowledge. Okay. Just we have the mathematical knowledge, then we can easily do in the single entry system of bookkeeping. But if you want to maintain the books in the double entry system of bookkeeping means, yes, that person is required thorough accounting knowledge. Second one, only recording and maintaining the financial information. Yes, in this bookkeeping, that is in the double entry system of bookkeeping also, we are going to record the financial information. That's it. We are not going to analyze or we are not going to interpret or we are not going to compare with the any other things. Just we are going to prepare and the whoever the stakeholders will be there, they are going to compare or they are going to take the decision. Okay. Next, records the historical cost, not the present value or PV. PV stands for present value. Okay. So whatever for example, 1 year before we have purchased the plant and machinery, they are going to record that plant and machinery, whatever we have paid on that time, that price will be there, correct? But same value we are going to maintain in our balance sheet, but we are not going to maintain present value of the asset. Okay. Whatever book value is there, only that book value we are going to maintain. That is also one disadvantages of this double entry system of bookkeeping. We know present value, whatever rupee is valued today, that will be not same for the next day or after 1 week or after 1 month, correct? So that is the disadvantage here. And the last point, increase the volume of accounting work. In the single entry, just they are going to record and they are going to keep quiet. But here, it is not like that. They need to record in the double entry system of bookkeeping. That is, they need to pass the journal entry, ledger account, all these things they need to do in the double entry system of bookkeeping. So much of accounting work will be there. So these are the few disadvantages of double entry system of bookkeeping.
Next, methods of bookkeeping. So we have two types or two methods of bookkeeping are there. So first one, that is manual bookkeeping, and second one, computerized bookkeeping. So in the manual bookkeeping, yes, it is called as a traditional method of bookkeeping, and this computerized we call it as modern method of bookkeeping. Okay. So in the traditional method, I think so you have seen the ledger books. One or the other way you have seen the ledger book. So big books will be there, correct? So there we manually enter all the details or all the activities in the book. Okay, that is manual bookkeeping. And it comes to modern method, that is computerized bookkeeping. Here all the transaction will be recorded through the computers. Nowadays we have Tally. Okay, in Tally all your subsidiary books, okay, all your subsidiary books will be there. Easily we can record there only. So there is no need to record manually. So these are the two methods of bookkeeping are there.
Next, types of bookkeeping. So we already discussed methods of bookkeeping. So methods of bookkeeping, we have two methods. One is manual entry and Second one, computerized entry or traditional method of entry and modern method of entry. So method is different, types of bookkeeping are different. Okay, so there are two different topics. So we'll see what are the different types of bookkeeping. Okay, so here broadly classified into two categories, that is one, single entry system of bookkeeping, and the second one, double entry system of bookkeeping. So we'll see what do you mean by the single entry system of bookkeeping and what do you mean by double entry system of bookkeeping with example. So single entry system, the word only tells you the single entry. There should be no two entries or two-side effect. That is debit and credit is not there. Only single entry they are going to make. Usually the petty kirana shops, they are going to maintain this single entry system of bookkeeping. Okay, because the volume transactions are very less in numbers, correct? So they can easily maintain this single entry system of bookkeeping. If the volumes are more or number of transactions are more, then it is very difficult to maintain in the single entry system of bookkeeping. So on that situation, they will go for double entry system. Okay. So this is a brief introduction about the single entry system of bookkeeping. So we'll see the meaning. Under this system of bookkeeping, generally a cash book and books to be recorded, personal accounts are only maintained. Okay. So I have told you, right? In the large number of transactions are there. On that time, it is not applicable. Okay. Only with the less number of transactions are there. On that time, it is implemented. So in that also, they are going to record only cash inflow and cash outflow. That is in the cash book they are going to maintain, and any credit they are given. For example, for any customer, they are given any credit. So on that time, they are going to record in the personal accounts. So these are the two books they are going to maintain in the single entry system of bookkeeping. One is cash book and another one is personal book. It is not really a system because under this system, there are maybe no record of transactions and only partial record of some others. So they are not going to record all the transaction. They are going to record at randomly. If for example, 3 transactions will be happening in that petty shop. So including all the 3, they are going to take the total and they are going to record the amount. Or if they are given credit for any customer, that transaction they are going to record. Continuously, they are not going to record. Okay. So partially, they are going to record other transactions only. Why? Because they are given on the basis of credit. So they require how much credit they have given. Correct. So for that purpose also, they are going to maintain. Single entry system of bookkeeping is not perfect and frauds and mistakes can hardly be detected. Proper results cannot be obtained by its use. In the single entry system of bookkeeping, finding the frauds or mistakes or error, it is very hard to find. Why? Because they are not going to record all the transaction, correct? Partially, they are going to record the transaction. In that, how can we find or how can we identify the errors in that transactions book? Okay. So it is very, very difficult to track the or errors and frauds in the books. Proper results cannot be obtained by its use. Why? Because already we have discussed the meaning, correct? So in that meaning only they are given, only partial they are going to record, not completely, correct? So on that situation, proper results will not be getting. Okay. So for example, a single entry is made for all the income and expenses of a business for a month. Okay. For 1 month, they are going to record whatever the profits are there or whatever the incomes are there and whatever the expenses are there. Just they are going to record only that thing they are going to record. The balances of the income and expenses are carried forward to the next month. So whatever the profit is there for the month of January, they have spent the expenses of 10,000 and they have the revenue of 20,000 rupees. So 10,000 is the expenses, 20,000 is the revenue. So revenue minus expenses, it is your profit, correct? So 20,000 minus 10,000. So 10,000 is the profit amount. So that profit, what they are going to do, they are going to carry forward for the next month. That is for the February month, they are going to carry forward that 10,000 profit. And the next month starts with the previous month's total income and expenses balance. So whatever the previous month balance is there, that is January month, they are going to start with the same balances. That is the single entry system of bookkeeping. So next we'll see what do you mean by double entry system of bookkeeping. The double entry system of bookkeeping can be defined as the system of recording transaction having two fundamental aspects. One is involved in the receiving of the benefit and the other to giving the benefit in the same books. That is, in the debit side, whatever the expenses are there, we are going to record, and the credit side, we are going to record whatever the losses are there in the ledger account. So next, we have two side effect in the double entry system of bookkeeping. One is debit and another one is credit. We have two side effect will be there. Okay. In that we are going to do all the bookkeeping. Okay. For example, purchase of plant and machinery and paid through cash rupees 10,000. Okay. So where is the two side effect? So plant and machinery comes to the business, correct? Asset is coming to the business. So for that, we are going to pay in the form of cash, 10,000. So plant and machinery comes to the business and cash is going out of the business. So these are the two side effect. One is asset coming and another side asset is going. That is cash is going out of the business. That is the two side effect. Okay. That is here also given debit and credit. So for each entry or for each transaction, in the double entry system of bookkeeping, we are going to record debit and credit. That is two side effect will be there. And there is no hard rule, only debit and credit. Okay. It may be debit and debit or credit and credit. That is also possible. Or vice versa. Credit and debit, debit and credit. Anything is possible. So next, accounting equation. Here in this, the medium level shops above the petty shops. Okay. What they are going to do? They are going to record all the transaction in the accounting equation form. Okay. For this also, no need to or no required the fundamentals of accounts. Okay. So easily they can record all the transactions in the accounting equation. Accounting equation is nothing but all the two side transaction they are going to record. Formula for accounting equation is capital is equal to assets minus liabilities. You will get the accounting equation. Okay. The mathematical equation form you will get. For example, journal entry. For double entry system of bookkeeping, one more example is journal entry. Format for journal entry is serial number or date, particulars, ledger folio, debit and credit. Okay, this is the format for journal entry. Same example I will take. Okay, purchase of plant and machinery for rupees 10,000 paid in the form of cash. So serial number 1 or whatever the date is there that we are going to record. Under the particulars, as per the real account rule, debit what comes in. That is plant and machinery comes to the business. So plant and machinery account, debit to cash account. Because cash is going out as per the real account, debit what comes in, credit what goes out. So what is going out? Cash is going out of the business. So to cash account. So plant and machinery account, debit side 10,000 and to cash account, credit side 10,000. So this is the example of double entry system of bookkeeping.
Next, difference between bookkeeping and accounting. So here we'll see what is the difference between the bookkeeping and what are the difference of accounting is there. Okay. So first one, to prepare original books of accounts. So in the bookkeeping, yes, all the primary entries will be done in the bookkeeping only, correct? So from that bookkeeping entries only, we need to start with the accounting, correct? So in the accounting, once we get the primary entries from the bookkeeping, then we are going to proceed with the record, analyze and interpret business transaction. That is our journal entry. Okay, recording, summarizing, analyzing, that we are going to do in the accounting. So next, recording the business transaction, that is monetary or monetary's worth or money or money's worth. That business transaction we are going to record in the bookkeeping. When it comes to accounting, it is having the wider scope. Okay, it is only limited to the business transaction. But when it comes to accounting, it has the wide scope in the market. Next point, clerical works involved in it. So in the bookkeeping, it's nothing but all the clerical work because we need to record all the transaction, correct? So clerical work will be involved. So when it comes to accounting, it has concerned with the low level, medium level, and even top level management works will be there. So here only clerical work. Here we have all the hierarchy level will be there in the accounting. So next, it's dependent on accounting, which mean it meaningful and purposeful. So without this bookkeeping or recording the transaction, we cannot go with the further, correct? So with this bookkeeping transactions only, we can prepare the journal, ledger, trial balance and other things. So this is the meaningful and the purposeful. When it comes to accounting, accounting is based upon the bookkeeping, which is initially and vital part. Okay. So after this only, we need to receive or we need to record all the other transaction in the accounting. So next, under the bookkeeping, it does not show the net result of financial position. Why? Because we are not going to prepare any books of accounts. Just we are going to record the transaction. Correct? So we are not going to prepare or we are not going to analyze any transaction here. So while it comes to accounting, it shows the net results of the business. Why? Because we are going to prepare all the financial statement and then we are going to analyze and then interpreting the results. So we will get the net results in the accounting. Next, for bookkeeping, accounting concepts and conventions are followed while recording the transaction. Okay, we have 9 accounting concepts and 4 accounting conventions are there that they are going to follow, and then only they are going to record the all the transaction in the bookkeeping. While it comes to accounting, method of reporting and interpretation may be vary from firm to firm, because if it is sole trading concern or sole proprietorship, okay, or partnership, MNC company, IT company, okay, they are following their own ways of the book of accounts.
Next, summary. Here we can recap whatever we have discussed in this session. Here we have discussed introduction to bookkeeping. So what is the general meaning of this bookkeeping and why they are going to maintain, or what is the example for bookkeeping that we have discussed in the first. Okay. So next, meaning and definition we have discussed, correct? So what is the meaning of bookkeeping? That is, it is the art of recording business transaction in the books of accounts in an ordinarily manner. So that is the meaning of bookkeeping. Okay. So they need to maintain all the books or all the transaction in the books of accounts. And we have discussed what are the process or whatever the process involved in the bookkeeping. That also we have discussed. Next, we have discussed objectives of bookkeeping. There are few objectives are there, but we have taken only 3 objectives of bookkeeping. Next, that is elements of bookkeeping and accountancy. Here we have 3 main elements of bookkeeping. That is, one books, second one is ledgers, and third one is trial balance. So in the books we have different 8 books of accounts are there. Okay, that is cash book, purchase book, sales book, purchase return book, sales return books, bills receivables, bills payable books, and journal proper. These are the 8 different books are there. And next, ledger. Okay, what is the format of ledger that we have discussed, meaning of ledger we have discussed, and trial balance. Okay, the format of trial balance also we have discussed. Next, methods of bookkeeping. So we have 2 different types of or 2 different methods of bookkeepings are there. That is, first one, manual bookkeeping and computerized bookkeeping. That is traditional method and modern method is there. Next, we have discussed difference between bookkeeping and accounting. So what are the differences of or major differences between the bookkeeping and accounting? Next, types of bookkeeping. So we have 2 types of bookkeeping, that is single entry system of bookkeeping and double entry system of bookkeeping. and we have discussed what is the meaning of single entry system of bookkeeping and which are the books they are going to maintain in the bookkeeping. That is, in the single entry system of bookkeeping, they are going to record. All those we have discussed. Next, double entry system of bookkeeping. So in this double entry system of bookkeeping, we have discussed the meaning and what do you mean by debit and credit and what is the accounting equation and format for journal entry also we have discussed. Next, we have discussed advantages of double entry system of bookkeeping. So here we have 7 advantages of bookkeeping. That is double entry system of bookkeeping that we have discussed. And next, we have discussed disadvantages of double entry system of bookkeeping. There are 4 disadvantages that is also we have discussed. Thank you.
If you haven't subscribed to our channel yet, I want to request you to hit the subscribe button and turn on the notification bell so that you don't miss out on any new update or video releases from Great Learning. If you enjoyed this video, show us some love and like this video. Knowledge increases by sharing, so make sure you share this video with your friends and colleagues. Make sure to comment on the video for any query or suggestions and I will respond to your comments.